How do you trade the Trump win? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Tony Greer, editor of the Morning Navigator newsletter, who's joining us from his new digs. They look great. Hi, Tony.
Hi, Mag. Thanks very much. You have good taste. I'm loving it. It's going well.
I love it. We have standing up Tony too, which is going to bring a
Yeah.
lot of energy. Not that we need it today.
I'm literally trying to keep one hand in my pocket so I don't talk like an Italian. So go ahead.
You talk like an
Fire
Italian,
away.
Tony. You talk like an Italian. That's totally fine. We have a lot of markets with some pretty monster moves today, so we're going to dive right in. We have the Russell up almost 6%, the U.S. dollar extending its gains, the VIX down 20%. What's been the most interesting thing for you on this first day following Donald Trump's victory?
I tell you, there's been the most surprising thing is the unbelievable strength in the markets in response to the Donald Trump election. We were set up to have a total sell the fact type of event, and that may still happen. I don't know yet, but the odds of it are waning given the way the market performed today. But if you remember, Maggie, the markets took off as soon as Trump broke away in the polls and on poly market. Went from a 50-50 to like a 70-30 lead essentially. And that's when the S&P legged up again in anticipation. And we kind of sat around for the week before the election, teed up like a beach ball to be sold. And the emotion associated with the Trump win, I think, is why people came in and said, okay, let's put these trades on the pad today. And they left skid marks all over the tape.
Yeah. And also maybe people trying to handicap the fact that it's not just a Trump win, but Republicans may take the Senate and also the House, which increases the odds of things actually happening. Now, traditionally, markets like gridlock because it's a little bit safer, but it seems like for the moment, people are really running with this idea of momentum.
Yeah, you can start off by saying, nothing says capitalism is in and Marxism is out like 5 Sigma rallies in Goldman Sachs, JP Morgan Chase, and American Express on a day like today, right? They're all screaming along to new all-time highs with no offer in sight, right? So that's at the top of the leaderboard. There are some home builders. There are some regional banks, Live Nation with 5 Sigma rallies. There are 4 Sigma rallies in the dollar, the Dow Jones, industrial metals and mining, banking, industrials, 3 Sigma rallies in S&P, Bitcoin, airlines, software, the equal weighted Dow Jones, and 2 Sigma rallies in the NASDAQ momentum stocks and basic materials and NVIDIA. So with that kind of powerhouse lineup coming out of a purely emotionally driven election result, it's hard to even fathom fading this move right now. That's just my opinion,
Yeah, that's exactly what I think a lot of us are wondering about. And you and I talk about this all the time, right? And I know that when it moves, you respond and you're looking at the price movement, but is there a danger that people's sort of I don't know if you want to call it bias, but just the narrative around what they're doing clouds judgment here? Like how do you kind of try to separate, am I actually following the momentum or is there something else that's driving me here, and how do I kind of take a check on that?
Be conscious that you're managing the risk. That's really the whole name of the game, because it's hard to make money in the highs of a market, especially when you're even when you're bullish, right? I mean, if you've got the position on and it's on the highs, you're fortunate, but you're looking for other ways to make money at the highs based on the view that stocks are on the highs, and it's really hard to find performance from there, right? And what we got was just an unbelievable, visible, observable performance from the new high, which looks, smells, and tastes like a breakout. So if you're going to go by the fact that what I've been saying going into the election was, when I look in the rearview mirror of the S&P this year, we had 2 steep spikes lower that were steep in price and short in duration. The triple scare to 5,200, the rate cut scare to 5,600, and right back to the highs again. So to me, that's a market that is now waiting to probe all-time highs in new territory,
Mm.
right? You look in the rearview mirror, it held that one, it held that one. Now we're back to the highs, and now we remove the unknown of the election. See you later, bye. Next level, everybody pouring money in. I mean, I can imagine the money flow into the S&P today might have been an all-time record, like in history.
Yeah.
And,
And what do you
yeah,
think about the fact that so much of it was in the Russell? I mean, I know the sort of narrative out there is, oh, they're going to take away regulation, and that's going to be good for small businesses. But does that seem like it was going on, or is it just that the Russell was performance was below everything else, so that seemed like it had the most to make up? How are you looking at that Russell action?
there's a number of things. There could have been a major short in the market, or it
Mm,
could have just been the idea, like you said, like if Elon Musk is going to come in and basically, cut down the size of government, then the small cap company should be the one that really, kind of thrives, right? If they're going to not have as much red tape and regulation to get into business and manage business, et cetera. And that's just an off the top of my head theory. I'm not like a master of small cap stock, but I do see the chart is leaping directly to the all-time high, out of its old range, and much like everything else on the screen.
yeah.
So
So
yeah,
Gerard, hi everybody in the chat. You're all pretty active because I know it's been such a day to see these kinds of moves, even when people anticipated some sort of pro-Trump rally. To see as you said, Tony, the magnitude of the moves is really something else. Gerard just brought up a really interesting point, and he said the best thing, there's so much money sitting in the money market funds. Any dips seem certain to be bought. Great time for markets, in my humble opinion. That's true, but we also had yields moving today, which makes this kind of an interesting trend to watch. So, are you worried about that move in bond yields, or do you think we're gonna first, let's say, do you think that we will see people sitting in cash, uncertain, see this big rally and think, I got to get in it, especially through year end here?
I do. So to unpack that a little, I think that let's see how to start this, Maggie. How can I attack this question, Maggie? Where should I start? Should
So just okay, start simply because I when I threw yields in there, we just opened up a whole can of worms. So
so
let's go
here
back one step. What about money? Is there were there frightened people in cash or people looking for safe havens in
I'm
cash?
back.
Feel
I'm
like
back on thread here. I'm
okay,
back on thread. So, the rates are going higher. I understand. There has been, with high yields, at around 4.25%. There's obviously money parked in the money markets that can come into the stock market. We have to be. I'm still really, really cognizant of the Stan Druckenmiller, Paul Tudor Jones call kind of thing, where
mm,
they're out of, Druckenmiller's bearish as bonds that he's ever been. And I doubt he was in it for those last 25 basis points. I think he's
right.
probably in it for a bigger move if I had to guess. And Paul Tudor Jones is out of the way of bonds and in all the inflation hedges, right? Probably got
Mm,
some Bitcoin, some gold, some S&P, he's got all the traditional stuff that's going to perform and then some, I'm sure. So that to me is something that you have to worry about. The bond market took an obvious nosedive today, right? To new lows in the long end, I think it was. And that stuff's significant. If that keeps breaking down, what the reason that we have to pay attention to it is because I think that if you unpack their logic, it's a little bit along the lines of the Fed is at risk of a policy error because we're cutting rates with the S&P at all-time high and the data
mm,
doesn't seem to be that bad, and we're going to go ahead and cut interest rates, and it seems like it might be wildly inflationary. But then you've got the counterweight of Trump in office now, which is more than likely going to bring down energy prices, right? I'm not sure exactly what he's going to do, but he's going to drill baby drill, hook up the try to plug in some pipelines and get the oil flowing again. That'll get the general operating price of gasoline down. So that will be disinflationary. So that's why it seems like there's a little bit of balance to the idea that we're going to have this dislocating bond market lower with runaway inflation. And I
mhm,
think the fact that even though there's a big move in yields today and a huge move in the dollar, I'm really encouraged by the fact that the curve didn't budge,
mm,
right? So this is the entire curve moving in unison in the same magnitude, up and down, the whole blob. and not something where the curve is bending or steepening ferociously, where the stock market goes, whoa, hold up, hold up, hold up, hold up. What kind of change we got coming here? Let's, put the fucking brakes on before, and then stocks sell off. The VIX, rallies with people insuring their stock portfolios against this change in interest rate moves, right? So that steepening is the thing that gets me more nervous than this. The rates higher, we can tolerate rates higher. The Citi Economic Surprises Index just went from -40 to +20 something or 30 something, as the data has all been better than it was at the bottom of the growth scare, which is exactly where the Fed put on their first 50 basis point rate cut. Right. So that's why it seems like it lines up where they literally cut rates into the bottom of the growth scare. And if that growth scare doesn't really, kind of hold on and the data gets better, the stock market has no problem with higher rates.
Right. Especially if you're in, so there's so much in there, and let's tease some of that out a little bit, but you're focusing on, and we have to be cognizant of the growth side of the story, right? So if the economy's growing and we're unleashing a new era of growth for the economy, let's say you believe that less regulation and some of the things that we think are going to come along with a Trump presidency are going to unleash growth for stocks. And if it brings yields up a little higher, then that's fine, as long as it's being carried with growth. Really good question that I want to ask, because we're right in still just close to that question about money markets and whether there's cash on the sideline waiting to be deployed. Jared asking, are there many managers, right? Money managers, fund managers, who will have to chase performance into year end?
I think they just started chasing. You know what I mean? It looks like they sat down on their desks this morning and started their engines and started chasing performance. You know what I mean? Like, Maggie, it's like there wasn't much of a rotation in the markets today. It was student body up and gone, unless it was home builder, this home builder, home construction sector, and social media didn't go up. And neither, obviously, and gold miners went down with gold, but everything else was, up and gone. People, like I said about portfolio managers leaving the tire marks all over the screens, like I just told you about.
Yeah.
That's them saying, okay, we're getting into this before this shit gets away.
Yeah.
Buying the S&P like drunken sailors into new all-time highs.
Yeah. Yeah, and that's not usually a one-day event. It should be said, but it doesn't mean it's necessarily going to go straight up. Home builders, talk a little bit about a home builder. Are they responding to what we're seeing in yields? Is that why they're?
Absolutely, Maggie. I just want to see where they are for reference, but they were holding on to the highs very well. They're pulling back into moving average support with the move higher in yields. And what's cool is that we're going to find out whether this is a secular bear market in home building and home construction, which I would imagine, with I don't know how many new people that have come across the border that are going to need a place to live, seems like that's a logical fundamental thing that you could believe in anyway, right? A secular bullish home construction market. And we'll see if it holds trend here at the 200-day moving average. We'll get a great opportunity to buy it and rent it if we think it's the right thing. And I'll definitely be involved in that trade. That's a perfect TG macro lineup. It'll be a nice dip due to interest rates in a rallying secular bull market. Stick a bid in, man.
Yeah.
Manage the risk. Be a big boy. It's not that impossible to try.
Right. Manage the risk. I know you've said that a couple times, and that's super important. For different people, it's going to look like different things. But what are you talking about? Are you talking about being cognizant of your time horizon? Are you talking about making sure that you use futures and options to protect yourself and size your position correctly?
Well, all that stuff is, I'm not anybody's wealth manager. So sizing the position is up to you, right? What I'm thinking about is, from a tactical perspective, it means be prepared to trade more, not less. Be prepared to bail out of your position if it hits either, your risk level, technical level, financial, tap out level, whatever it is. Trade that. Manage the risk. Get out. Make sure your 10% loss doesn't become a 30% loss. And if you think that getting out was wrong, get back in again. and you just have to, it's being a big boy and be able to say, I'm right today, but I'm wrong tomorrow. So I got to get out tomorrow. And I'll tell everybody that followed me into the trade that I'm getting out.
Yeah. Yeah.
That's one of, go ahead.
Yeah, no, and I think that, this is something you talk about all the time, and I think sometimes people lose sight of if they listen to you talk about a sector because longer term, there are things that you tend to be more bullish on, but you're always getting in and out of trades. You trade.
Yeah. Oh yeah. You know, absolutely. Both ways, position wise, on my short term account over the course of a week. I mean, I trade way too many thousands of shares of Nvidia on a daily basis because that's the hot table.
Yeah.
And so when you find something like that, that's whatever. I don't want to get onto an Nvidia conversation, but that's where like my focus is, and names like that have been moving a lot because they're behaving like .com stocks. And I sat there for the whole thing and got my face handed to me. So when you lose at the card game a couple dozen times and get beat up after it a couple dozen times, you go into this card game and say, I know what's going on,
Yeah.
and you kind of, and you play the fake outs instead
Yep.
of getting strung up in them and be like, oh my God, this is, everybody's got this wrong on the open, sold, or, oh my God, it's breaking out and we're going to rally for 8 hours and I know it and they don't,
Yeah.
like stuff like that. So
Yeah.
that's the muscle memory from the .com bubble that a lot of these AI stocks are exhibiting now is my point.
Yeah, and if you're not as comfortable trading all the time, it's a good thing to A, know about yourself, but it also is fine, but you just have to adjust to that, and from what I can see, not try to grab the top and the bottom. That's what I see a lot of people holding on for too long on either side because they're trying to get the exact day. That's why they ask us so much about timing, and it's hard, right?
Yeah, yeah, and another way of managing risk, Maggie, is you can also not go chase things. You can say, I'm bullish this, but maybe not necessarily here, and let me give myself a 2-week time frame to see if it comes cheaper, and if
Mhm.
it does, where on the chart, where am I going to buy it then? I don't like it at $11. Where am I buying it? I'm 10 bid.
Yeah.
I've said the whole time during this exercise here through the election that, in uranium miners, I was like, I have clients texting me that because I'm a bid on the pullback. I'm waiting for them to pull back. Guys are hitting me like, where are you? I'm like texting, I'm in the grocery store. I don't even know where the thing is, but I'm like, I'm 30 bid uranium miners. Is it there yet? And they're like, oh, it's on the way down there. Okay, thank you. I'm going to bid 30. And for whatever, by a stroke of luck, it's held 30. It's held the moving averages. It's held support where it needs to. Just backed off from 34 to 30. And now I'm in at a 18% better price.
Yeah.
Right now I got some leeway. I can hold on a little tiny bit longer than if I bought it up there. Right. I can get down to fighting weight and get a smaller position if it's going against me rather than just puking the whole thing. I got some options if I'm patient and the market does come to me. And if it does get away, then that becomes into the category of one of the trades that you can say, it's better be out of a trade wishing you were in than in wishing you were out. Okay,
Yeah.
put that one to the list. There's 1,000 of them. I don't care.
Ain't that the truth? But you have to, be constantly checking that list. We have a question from Ian, which is also my next question, Ian, mind reader. And that is your view, of course, on Bitcoin. We saw crypto was a big winner today on the move. Uh, what's your thought on that?
I'm about to put laser eyes in my avatar.
For
If,
real?
if if that explains it, like I am a trader and I wrecked the laser eyes the first time up, and now I want a pair of my own, and like I want them done by people to do it. You know what I mean? Like the chart could not look better. It seems like it's obviously a levered bet on risk assets, and if if the slow moving cars in the risk asset race are putting up 3, 4, and 5 sigma moves today, then I'm going to say that this thing is breaking out like a house on fire and has the potential to go from 75K to 80K to 90K. And I mean, it could be Bitcoin trading like 2020, where it's up 400% at the end of the year or something like that.
I absolutely love that. And we're definitely going to pull that one. That's fantastic. Do you think that this will pull investors off the sideline into the asset class because of, what they see as a more friendly regulatory regime and a pro crypto stance in Congress? Or do you think this is really just a levered bet, one you like, but you're not thinking of it as a sort of tipping point for the asset class in general?
I would say in a frontier market like Bitcoin, where we've just had the recent ETF launch. And I mean, I don't know, I don't even remember the date, but right, it was we
Yeah.
had the whole run up into the ETF launch, and there was a little pullback, and that thing was up and gone, right? And why was it up and gone from there? Because corporate inflows were massive and continue to be massive. Like it seems like there is a bankroll of Bitcoin and various funds and family offices on the sidelines just waiting to get time sliced into Bitcoin.
Mhm.
You know what I mean? Like on every dip, there's still solid inflows into Bitcoin. When there's huge rallies, there's massive inflows into Bitcoin. I think there was 600 million of inflows into the IBIT last week, or I think it was in one day last week. And that, I mean, things like that, like at the highs, you're saying, these corporations that are buying this, and obviously with inflows that size, it's not Joe Sixpack. So the corporation is buying into whatever Bitcoin is selling. And whether it's an inflation hedge, whether it's a levered bet on risk assets, whether it's just a great currency with no central bank, they are all in on this thing, right? I mean, it could be like like I say, when people what do you think about the currency market? I'm like, I don't know. I'm just generally bearish fiat currency, right? They're losing their purchasing power. Gold's exploding, Bitcoin's exploding, silver's exploding. I mean, you can watch them go down. So that's I guess a way to express that. And I feel like people may have much stronger feelings for it and know way much more about it than I know.
Yeah.
And those are the people that are buying it. So that's very appealing to a trader like me who's just trying to run in front of them and make as much money as possible.
You mentioned gold. That kind of puked today. People were kind of thinking about that because it's been on a real run. Um, Purely dollar strength, or do you worry there's something else going on here, and do the levels matter to you?
I think
I
it's
know
pure
levels
dollar.
always matter, but
I do think it's pure dollar strength, Maggie, and that makes sense because the dollar came out like it had a cape and a DJT 47 on its chest this morning and made a new high, 105 bid. It ran over the yuan, the Aussie dollar, cable. I mean, it freaking ran over every yen, everything in its path got decimated, right? But so what got decimated also? Base metals got decimated. Gold got decimated. Gold has been rallying away from the moving averages, begging for a sell the fact event, begging for one. So I don't even care about the interest rate market. Gold said this is a good reason for us to sell off now.
Mhm.
At the top of the run from the new high that just made it 2,800 or something like that. But I think it stays in the bull trend very comfortably. I think we're going to pull back into moving averages, hold and go. But what's amazing about the biggest tell in the markets to me today is that you saw base metals get crushed with the dollar strength. And one of the biggest leading sectors on the day with a 4 sigma rally is industrial miners.
Mm.
Right. So there's somebody saying, yeah, I don't care about the base metal price. I'm buying miners today, and I'm buying miners today until the bell rings. So that's something to pay attention to. I think it's something to pay attention to that we just elected, who's supposed to be a drill baby drill president that we're all waiting for to get gasoline down $2 a gallon, and oil went from 70 to 72 today. And it's like, whoa, there's another glaring relative strength, beam coming out of my screen right now. Like, why the hell is oil up? So maybe it has to do with that. There was all kinds of headlines about a possible nuclear test after the election night coming down, or maybe that's why, or something like
Just
that. But
headline risk, which, by the way, we are in an environment where, regardless of what you think, that it is likely to be very headline driven, right? Like, if our past experience is anything to go by, this is a president that does policy through tweeting. You have a couple of other sort of, outsized characters who kind of, are likely to do the same. So, y- how are you going to think about doing that? That kind of creates another, I don't know if it's headline risk. It may be a headline tailwind, but it's still something that kind of comes out of nowhere. Is that going to increase volatility, do you think?
well, hold on to your hat, Maggie. You ready for this one? Did you notice that when Trump was in office, you obviously noticed when Trump was in office that he tweeted the stock market on every new high tick,
Mm.
right? Look at the stock market. It's beautiful. For 1,000 points that we heard from the guy all day, every day, and on Friday's close because the stock market was so beautiful. I paid very close attention to his campaign. I listened to every moment of Joe Rogan, every moment of the who else had him on, the Theo Vaughn. I listened to everything he had to say at rallies if I could, and he didn't mention the stock market one time, not one time. Right now, who the hell knows what that means? Who the hell knows why? But I'm itching to find out. And I think that we're going to find out. It's one of these things that I don't know what it means. I know it means something, and we're going to find out what it means. Either he doesn't want to be talking about something because he knows something that's so freaking bullish that it'll blind you, like maybe canceling income tax. Or so, like, what does retail sector do on the day he says, I canceled income tax? I mean, what does retail 10x that day? Or 5, whatever it does, the sector goes up in a multiple of whatever it's trading. So I'm just saying, and I know that may sound crazy, and it probably is, but I feel like he either knows something like that or something that's going to be rearranged, maybe with Elon Musk, cutting down the size of the government, that may be perceived as really bearish, and he doesn't want to get people run over in that, And I'm literally grasping at straws here, and I don't want to get rocks thrown at me because I'm sticking my neck out with these crazy theories, but it's something that you got to think about. It jumps out to me like a sore thumb who's listening for him to say stock market's beautiful, and never happened. So,
and you're right. I was sitting in an anchor chair every morning when he started tweeting at the stock exchange. So he mentioned it often, I can tell you. So
and it was so fun. There's some of the best tweets.
That was a really, really interesting observation, Tony. Thank you for sharing that, because it's the kind of thing that we're this is in some ways uncharted territory, right? And so we are looking for, I think everyone's looking for any signpost they can.
I want to be, I don't mind being on the tape for something like that. And it's one of the calls that hopefully if something does happen and we understand why, then people will appreciate it. And if not, then it didn't cost anybody anything. They can go about their business.
Exactly. So Jared asking, at what level on the 10-year does Tony think will create a problem for equities? Is there a psychological level that equities will be like, oh, hang on a second. No, you don't think it?
No, we just watched what did the stock market do when Fed funds went from 0% to 5.5%? I mean, the performance was mind-boggling. So I don't really, like I said before, I think it comes back to if the economy can bear it, the S&P can bear it. If the economy can hold in there, we can handle 7% interest rates. How about we do 7% interest rates at 3% unemployment? 2% CPI, 3%, 4% GDP growth, like 7%, I'm in, no problem.
By the way, I when we were talking about gold before, I meant to mention, I just talked to Rick Rule, who is Mr. Gold. For all of you, if you're interested, he said himself, I will just tell you that he has no idea what's going to happen to gold in 3 months, nor does he care. He's not a short-term guy. He's a longer-term guy. But if you're interested in this sort of miners, especially because they have been underperforming the record rally up till this point, he really had a lot to say about all that. So if you are still interested in gold and wondering what happens, you're not going to get a short-term take, but I encourage you to go look at that because it was very informative, as he always is, because he really knows that space. Totally. Tony, when we are looking at the Fed meeting, we're going to get that decision this week as well. It seems kind of anticlimactic after this, what we know now is in front of us. But do you expect a rate cut? Does it matter? Are you going to be paying attention to anything Jay Powell says, or is that sort of secondary?
It's kind of secondary, Maggie. I think that they've somehow done a pretty sick job once again. They're managing the lower rates, and they're not really causing too many like bubbles or anything like that as they lower rates with the S&P at the highs. We're not seeing those meme stocks, blow up or whatever. So I guess that I really am not expecting much, and I'll change. Like this move that we saw today, I think is way more powerful than anything that the Fed is going to do that the market is handicapped for a month now. So it's, if it's going to be, it's going to be 25 basis points. Market's going to go like, get that. We kind of saw that coming. It's great. Maybe we buy more stocks. I don't know. The S&P is going to get through 6K on some headline. And we'll see from there, and then maybe the pullback comes after there's an initial, Trump is in buying session, and then there's even more length around. But man, I was really hoping to get a pullback into moving averages. Like I just gave a presentation about what election trades I might be in on. And I was like, I'm all in on the S&P. I just wish I could get a dip. I'll tell you, if it dips to here, I'll buy this much. If it dips to here, I'll buy 3X. And if it dips to here, I'll sell my house and buy stocks. So I had the conviction. We just never got a
The
pullback.
time,
So
because it
who
moves so
cares?
yeah, it moves so quickly. So I guess the question as we wrap up is what is the biggest risk for you right now? What are you going to kind of keep on that side of the ledger, given everything else seems really bullish? What is your concern? And some people are asking, what do you think? Where do you think inflation's headed? Is it bond vigilantes? What's your biggest risk to this outlook?
If Druckenmiller is that bearish the bond market, then and I recall how bonds traded in 2022 when the risk of that whole year was a higher headline inflation number than the last one on the run up to 9%. So it was like that's the year that rates went up, stocks couldn't handle it, the whole thing. But the whole thing was there was imminent gap risk in the bond market with every piece of CPI data, right? It was like it keeps coming in hot. The question is how much hotter, right? And a lot hotter means the bond market dislocates lower and everybody freaks out. The VIX goes to 30 and they sell stocks, So that to me becomes the risk, I think, if we're heading into this potential policy error and Druckenmiller's bearish bonds and everybody's expecting extreme fiscal recklessness and rates start going higher. And then next thing you know, at the top of the move, there's a spike higher in rates, with bond markets collapse. I mean, that's going to derail the stock market rally. I don't care what the economy's doing.
Right, right. Yeah, those are the bond vigilantes. So people don't remember them, but they can do a lot of damage, at least in the short term. I
Yeah.
just talked to Ed Yardeni, who invented the term, and he's very bullish stocks, but he's watching the bond market. Like that's you have to take them seriously. So Tony, great stuff, great conversation. Thank you so much. Always love getting the tactical view.
Yeah. Right
Because I
on,
think a
Maggie.
lot of
Anytime.
people are trying to figure out whether they can trust this thing or not. So it seems really good and great chat. Thanks everybody. They have some interesting trades on as well, but everybody feeling pretty good about it. Gonna be back. We'll be back with you to wrap up this week post Fed. It's gonna be a crazy one, and we've got Julian Brigden, which should be a lot of fun. He's never shy about expressing how he feels. So make sure you join us for them. In the meantime, take care and good luck out there, everybody. Thanks, Tony.